Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. The magnificent meltdown. US and European futures stabilise after a tech-led rout sees the Nasdaq tumble to its worst day since 2022. The US pushes Ukraine for concessions at talks in Saudi Arabia as Kyiv launches what appears to be its biggest ever drone attack on Moscow. Plus, Germany's Greens demand tougher rules on defence spending. In talks aimed at unleashing hundreds of billions of euros, we will speak to the party's co-leader later this hour. Good morning, happy Tuesday. The superlatives coming thick and fast when it comes to the sell-off that walked through the Wall Street markets, of course, the markets in the US yesterday. The selling pressure, of course, the S&P ending lower by almost 3%, the Nasdaq 100 closing lower by almost 4%. You are closing into correction territory on the S&P right now, with stocks down about 8.6% on that index since the record highs. A bit of stabilisation so far in the session, but clearly expectations and assumptions about the Trump trade being unravelled and unravelled at pace. Citi saying that US exceptionalism is on pause, at least for now. European futures pointing to gains, though, of 0.5% after the losses of around 1.3% on the Stoxx 600 by the end of the close yesterday. FTSE 100 futures pointing to modest gains of about 0.3%, looking to add 26 points so far in the UK as the FTSE 100 looks to open at 8 a.m. UK time. Stocks and futures stateside, S&P futures pointing to very modest gains of 0.2%. Again, in the context of yesterday's losses, nowhere near pairing those losses, at least at this stage. Nasdaq 100 futures looking to add 20 points. The pressure was coming through across the Mag 7, as we said in the headlines. Also, the likes, of course, of Tesla, seeing a stock drop there of around 15%. But don't fret, because the president says he'll be buying one of those later today. Let's flip the board and have a look cross-asset. Big moves into treasuries once again. Yields down across the curve on the 2s, the 10s. The 2s and 5s both below 4% right now. The 10s, the benchmark, currently yielding 4.18. Yields down 2 basis points, almost 3 in the session today. Euro-dollar stabilising at 108. A little bit of strength coming back for the single currency in the session today. Oil at a 6-month low on those growth concerns, focused, of course, on the US. $69 right now on Brent. Currently stabilising at that level, but the pressure continues on the oil space. And Bitcoin gaining 1.2% in the session, but crypto as an asset class has been under pressure as well. Again, linked to concerns about recession risks stateside, and a little bit of disappointment around the actions from the Trump administration to support the crypto space. Currently, Bitcoin at 80,000. We'll do a deep dive on the crypto space this hour as well. Currently up 1.2% in the session. Let's cross over to Singapore right now. Ava Hong standing by with a check on the Asian markets. Ava, what is the finger on the pulse of the Asian markets this Tuesday?
Yeah, I mean, it's looking quite negative. But that being said, we're actually seeing the region's benchmark, which earlier lost 2+%, managing to pair those declines. So it gives you a sense of a bit of stabilization, the moderation of losses in the region, even though there was no outright catalyst to prompt this. I suppose the question also involves, is this a buy opportunity for Chinese Hong Kong stocks that are not faring as badly as the rest of the region today? Possible. I mean, you have AI optimism, NPC, stimulus hopes, and then you have the likes of Citi upgrading Chinese stocks as they downgraded those US ones. Note as well that even though the Nikkei is pairing earlier declines, it is still underperforming. Flip the board. Some of this is to do with the yen strength. We saw a downward revision for GDP, but most think that this is not going to derail the BOJ next week in terms of a hawkish hold. The yen strength is also related to some of the safe haven demand amid these uncertainties. Also interesting, the support that the renminbi is finding. Our colleagues have highlighted this kind of coincides with the Chinese stock outperformance. Very interesting dynamic there. Flip the board again, because there seems to be this further denting of the US exceptionalism narrative. And if you compare that to what we're seeing on the Hang Seng China, VIX surged overnight, but if you look at the gauge of vol for Hang Seng China Enterprises, it barely budged. And then keep in mind as well, if you compare its performance with the S&P 500, so far this year, their fortunes have been reversing. Tom?
Yeah, that outperformance continues, doesn't it? Avril Hong in Singapore with a check in the Asian markets. Avril, thank you. US markets then tanking, as we've been discussing yesterday, amid that trader anxiety over tariff policy and a potential recession, of course, in the world's largest economy. Worth noting as well that in terms of the concentration of the sell-off, the most concentrated sell-off that we've seen, over 2.5% since the dot-com bubble. Let's bring in Bloomberg's Valérie Teitel right now for the details in terms of how the markets have been reacting. The trillion-dollar question then, Val. Has the market meltdown got further to run?
Yeah, big question for the market to digest today. Was this the detox period that Scott Bessent was talking about on Friday? Have we priced it in yet, or is there still more to come? I, for one, was very surprised to see that this drawdown in the S&P 500 is now more than what we saw back in August with that market shakeup back in August. We've now slid more than that. The S&P 500 down nearly 9% from its peak. We've seen a raft of Wall Street downgrading their outlook from U.S. stocks, from like of J.P. Morgan, from Citi, from RBC. Tech also having its worst session since 2022. The Mag 7 has now erased all of its post-election gains. One of the big drivers of that yesterday was Tesla having its worst session in nearly 5 years, Tom, down some 15%. A lot of this being driving that decline in tech stocks yesterday. As I mentioned, the Mag 7 now erasing those post-election gains. But the bad news really doesn't stop there. We had some after-hours movers, a profit warning from Delta. We saw that stock move double digits in after hours, dropping nearly 12%.
Yeah, suggesting maybe that the consumer is becoming a little bit more cautious as well, stateside, in terms of travel and spending on flights, etc. Trump as well saying that he's going to buy a Tesla, of course, to support Elon Musk. Talking of Trump, any signs then, Val, that the markets are providing a guardrail for this president when it comes to his tariff policy? Any signs that he's starting to rethink what seems to be the catalyst for the downside on these markets?
Look, Tom, I'm afraid not yet. We had a tweet from him just a few hours ago, really doubling down on his tariff threat when it comes to Canada, calling Canada a tariff abuser, saying we don't need your cars, we don't need your lumber, we don't need your energy, we are going to be making America great again. So if we don't have a change of language from Trump, who are we going to get a change of language from? Possibly the Fed. And in that, guys, we've seen two-year yields extend their rally overnight, now hitting a fresh year-to-date low when it comes to the two-year yields. We're now pricing in over a 50% chance of a Fed rate cut when it comes to that May meeting.
Val, thank you very much indeed. What does the Fed do? Does that language around being comfortable holding on pause start to look a little dated, given the concerns about recession risks and the sell-off that we are seeing in these markets? Now to geopolitics. US Secretary of State Marco Rubio downplaying the possibility of a breakthrough in today's meetings between US and Ukrainian officials, saying talks will focus on potential concessions. This comes after Ukraine launched one of its biggest drone attacks against Moscow since the war began. For more, let's bring in Greg Sullivan, Bloomberg's Russia economy and government editor. Greg, what do we expect then out of the meetings? There've been a lot of drum roll up to this set of conversations this week. We heard that last week. But now, as we've been discussing, possibly the US pouring cold water on what to expect.
That's right. Ahead of these talks in Saudi Arabia, we saw Secretary of State Marco Rubio come out and say, look, we're not looking for a major breakthrough here. The U.S. is basically in a position where it's listening, trying to see what's possible, especially in terms of concessions. He did say that he expects concessions from both sides, and that could include territorial concessions from Ukraine, which will be quite hard for them to swallow. For the Ukrainian side, this is a pretty high-stakes meeting. We saw that the White House meeting last Friday was pretty bad for Zelensky. There's been a ton of pressure heaped on Zelensky by the White House, and the Ukrainian side will really be looking to tamp down that pressure and tone it down and remain engaged so they can hopefully stay at the table and in any kind of future ceasefire agreement potentially have terms that are more favorable to them. So a high-stakes meeting for him. And, of course, it comes as Ukraine has launched this massive drone attack against Russia, which included 74 drones against the capital itself and hundreds across other regions. So definitely a signal there amid the start of these talks.
Yeah, indeed. And we continue to watch the fallout of that attack, of course, on the Russian capital. And the pressure from the US seems largely to be one-sided in terms of cutting off arms, cutting off intelligence, the rhetorical, of course, tongue-lashing that Zelensky faced in the Oval Office. We'll wonder then if any pressure is going to be put on Putin. We know that the president's Middle East envoy, Middle East envoy, Steve Witkoff, is expected to meet President Putin in Moscow at some point soon. What do we expect from that meeting then? Are the US finally going to put pressure on Putin?
Well, we don't know many details, but we do know that Witkoff is expecting to go to Moscow. He is, as you said, President Trump's Middle East envoy, but he has been engaged in the Ukraine process as a representative for Trump. It will be interesting to see what, if any, pressure the U.S. puts on Moscow. So far, as you said, the pressure has been largely one-sided. We did hear from the Ukrainian side, from Zelensky, saying that they would be open to a truce if that includes air bombardments and naval, but it's not clear that the Russians would accept that. The Russians have really given no indication of any kind of concessions they're willing to make, even though we do know that they would be open to a ceasefire under certain conditions, one of those being an eventual peace long-term settlement. But right now that seems far off, so it's hard to see what concessions Russia is actually willing to make.
OK, Greg Sullivan, I feel we'll be coming back to you in the days ahead. Bloomberg's Russia economy and government editor with the latest, of course, on these discussions, both in Saudi Arabia and leading up to that meeting in Moscow. Thank you. Up next, Germany's Greens make a counter-proposal to Friedrich Merz's flagship defence bill. This all ties back, of course, to Ukraine and the US unwinding its transatlantic relationship. I'm going to be speaking to the co-leader of Germany's Greens. That is next. Plus, a little later in the show, we're going to talk about how AI is driving demand for data centres. We discuss what this means for Europe in terms of the view from Schneider Electric, how they're building into the data centre revolution. Stay with us. This is Bloomberg.
I think it's perfectly normal in a situation like this that there are concerns and that there's demands, but it's also perfectly normal then to talk about those concerns. And I am optimistic that the two goals of these measures that we have to strengthen our defense effort as the European pillar of NATO and to increase infrastructure spend will be points where agreement will be found at the end.
The German Finance Minister, Jörg Kukies, sounding hopeful on the prospects of greater defence spending coming out, of course, of Europe's largest economy. Germany's Greens are demanding tougher rules for defence spending in talks aimed at unleashing hundreds of billions of euros for the country's prospective ruling coalition. The party has made a counter-offer that would tighten restrictions before debt limits would apply. The support of the Greens is needed to pass the financing package, which requires changes to Germany's constitution. Very pleased to say we're joined now by Franziska Brantner, co-leader of the German Green Party. Franziska, thank you for your time. What is your expectation? What is the likelihood right now that a defence deal will be done that loosens restrictions on spending in the current parliament?
Good morning from Germany. We are ready to take on responsibility, but of course, in a way that makes sense for Europe, for Germany, for Ukraine. And yes, the defense bill that was presented is very unambitious. It only has 1% for defense spending in the general budget. And also, it is a very narrow definition of defense. It doesn't even include intelligence services, etc. And there was nothing on Ukraine. So for us, it's paramount that we have support for Ukraine also in a big defense package. And these are our conditions that we put on a table. It needs to include Ukraine. We need to be ambitious on our defense spending, and we need to define security larger. So we put out our own proposal last night. And of course, we are ready to negotiate. But I really want to make sure that we really serve Europe's security. And there's a second large bill that is put on a table where we are not sure at all if the spending will go into German infrastructure, if it will serve our security and interests of our country, or just some nice gifts by the parties that they have promised during the election campaign.
OK, yeah, and of course, for the context, the Green Party has long pushed for more defence spending. So you met with the CDU, you met with Friedrich Merz. last night, and of course the Social Democrats as well. What was the atmosphere like? Was it constructive, the meeting?
I was not part of the meeting. It's our group leaders in Parliament that are negotiating. But I heard that these are, not so easy talks. But we stay constructive, serious, and are ready to do what it takes for our country. We're not ready to just give a blanket check and a hand free for just government spending without any structural reform, without any ambition, without any help for Ukraine. That's not what we are there for.
OK, but it's clear you are ready to negotiate.
Of course, we have been ready to negotiate since the night of the elections. We have been surprised that there has been nobody really engaging with us seriously, even though it has been obvious that we are needed for a majority. But we have been, signaling from day one that we are ready to negotiate.
Do you think at this point, it's possible, given what you heard from your counterparts and your colleagues in those discussions yesterday, do you think it's likely that we could get a deal by the end of this week?
No, I really hope so. The situation is dire in Ukraine. We really need Europe to speed up its own defense spending. But we also need to realize that cybersecurity, there are new attacks on our security, and we need to be in a modern phase of security. And we need to make sure that we have all we need for our own country in terms of infrastructure. We in Germany, we have crumbling bridges. There's a lot to be done. And we need to do this now. And it's unfortunate to see that the new coalition is not ready to tackle the challenges, but just to pour over more money without really tackling root causes.
Franziska, you are ready to negotiate. You're clearly involved in these conversations now. What are the red lines for the Green Party at this point on this spending?
No, I just told you some of the things that are important to us on the defense bill. As I said, it needs to be ambitious. It is for us really difficult to envision a bill where you say only 1% of our budget goes for defense spending. We're supposed to do 2%. We were arguing for even more. But to have 1% is really, really little, and no inclusion of Ukraine. And at the same time, we see that the government is planning big gifts to some part of the electorate. It's really going to give more money to the rich in our country instead of spending it on our defense. That's not for us acceptable. We need a fair burden sharing and a real push for our inclusive security.
Yeah, and you've clearly acknowledged, look, the eyes of Europe are on the Green Party right now. So the focus is very much there, whether it's investors or lawmakers across the Eurozone. The eyes are very much on what you're proposing and your negotiations. Is there a point at which is it fair to assume that if the deal doesn't get done in the current Parliament, that it won't get done at all because of the seats taken by the AfD in the new Bundestag and Die Linke on the far left as well? Is that a fair assumption? The deal does not get done if it moves to the next Bundestag?
Look, we have, of course, if there is no agreement at all, then the next Bundestag will be more difficult, but and maybe impossible on that topic. That's why we have introduced our own defense bill, where we say in the worst case, if the proposal by the government or the next government is not finding agreement, then we have a proposal which is clear, where we know security communities in Germany are behind it, Europe is behind it, and then there can be a vote in favor of it. That's why we really said last night, we introduced our own bill. We just really want to make sure that the defense package gets through. If we cannot agree on the rest, it might be much easier to find majorities on this in the next parliament, maybe also in security, but it's much more dislikely. So we introduced our defense bill to make sure we have an agreement on defense, and we hope that we will have now constructive negotiations.
Yeah, and you've talked about that percentage. 1% is what's been proposed, of course, by the CDU and the SPD. You're pushing for 1.5%. Is there flexibility on that? What is your expectation that they'll commit to 1.5% on defence?
Look, we know that they do put the bar very low at 1% so that everything beyond 1% can be financed by debt. But let's be real. If we cannot just finance our defense budget continuously by debt, it's not serious. And it's not fair to next generations. So we really also hope that there is an agreement from their side to be ambitious, maybe also to see that it's unfair for next generations. But we also hear that they need the flexibility in the budget now to finance their other projects they have agreed on when it comes to retirement, pension plans, lowering the taxes for the rich. So they need that space in their budget. But we really think now it's a priority for security and not for now, letting some off the hook and making it even more unfair in our society.
Okay, Franziska, before we let you go, one last one. I'll push you on this if you don't mind. You've suggested that there is the possibility of a deal this week. What would you say the odds are right now of a deal getting done this week? More than 50-50?
I'm not going to do this. I know it's difficult. These are difficult negotiations. It's been difficult for the Conservatives, which have been, saying the opposite to what they're doing now, to agree on anything. But, we really urge them to give up on their ideology and be ready to invest in our country and European safety.
OK, Franziska Brantner, thank you very much. Co-leader of Germany's Greens. Really appreciate your time, and we continue, of course, to monitor very closely those negotiations. Coming up, Greenland's parliamentary elections take on a new significance after President Trump said he wanted to make it part of the United States. We'll have more on what to look out for next. That's coming up. This is Bloomberg. Now, parliamentary elections in Greenland would ordinarily, of course, pass well under the radar outside of Greenland and maybe Denmark as well. But the US president's ambitions to make the Danish territory part of the United States means more people are paying attention this time around. Let's get more then from Bloomberg's Copenhagen bureau chief, Sarah Sjolin. Sarah, what is at stake ultimately for Greenland and the United States?
Well, this is essentially about Greenland's future. And I guess you can say that about any general election. But this time it's really about independence. Trump's interest had really been a wake-up call for the island and its population. Now they feel seen, they feel heard, they feel like they're special, and maybe there's someone who wants to invest in them, and they can see they have a value. And coming off of about 300 years of being part of Denmark, Greenland is at an inflection point now where they feel like they need to have their own voice, they need to be able to have their own culture. But at the same time, it's not just an easy breakaway from Denmark. And that's where this election really becomes interesting, because all the parties are essentially pro-independence. And if we go back for general election for the last many decades, it's always been on the ticket. Independence has been a big part of it. But this time, it's really at a point where now they can't go back. They have to follow through with some of these independent wishes. But the parties just don't agree. They agree we want to split from Denmark one way or another, but the how and the when, that's completely up in the air. So what I'm really going to be looking at when we get the results later tonight, maybe tomorrow morning, is this one party called Naleraq. And if you're out there looking, just look for this one party. It's a pro-independence, nationalistic, some would call it populist party. And if they get a really strong showing, and maybe if the leader becomes prime minister, we could see things really shake up in Greenland. And when it comes to Trump, it's obvious, an independent Greenland, if they break away from Denmark, that would be easier for him to gain influence of, to invest in. But having said that, Greenland does not really want to be American.
Yeah. OK, really excellent setup. Bloomberg's Copenhagen chief, Sarah Sjolin, on these elections in Greenland. We will be watching closely. Thank you, Sarah. Coming up, we're going to discuss crypto's wild ride since President Trump returned to office with Deutsche Bank's Research's senior strategist in the space, Marion Laboure. That comes up next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The magnificent meltdown. US and European futures stabilise after a tech-led rout sees the Nasdaq tumble to its worst day since 2022. The US pushes Ukraine for concessions at talks in Saudi Arabia as Kyiv launches what appears to be its biggest ever drone attack on Moscow. Plus, Germany's Greens demand tougher rules on defence spending in talks aimed at unleashing hundreds of billions of euros. The party's co-leader tells us she's hopeful of a deal by this week. Breaking lines crossing right now from the German automaker. Staying on the story of Germany, Volkswagen, the redhead, VW, seeing 2025 operating return on sales of between 5.5% to 6.5% at the high end. So at the high end of that range, that is above the estimates of 6.2%. Volkswagen's full-year operating profit coming in above the estimates, so that is a beat in terms of full-year operating profit, just over 19 billion euros. The estimates had been for 17.9 billion euros, so about €1 billion of beat coming through for full-year operating profit. In terms of net cash flow for 2025, they see that number at around 2 to 5 billion euros. Full-year revenues, by the way, coming in also above the estimates. A beat there in terms of full-year revenues. 324 billion euros. The estimates have been for 321 billion euros. Full-year dividend per share coming in at €6.30. And Volkswagen sees 2025 revenue up to 5% in terms of the increase. So they're looking at potentially an increase of revenue of around 5%. Of course, the stock has essentially been largely flat. About 1.5% is the gain that we've seen for VW in the last 12 months. Focus, of course, on the cost-cutting plans, new models, anything they have to say about the tariff impact, of course, the Chinese market as well. Let's bring in Bloomberg's Oliver Crook, of course, has followed this story in granular detail over the last few years. Joining us out of Wolfsburg right now, where Volkswagen is, of course, headquartered. Ollie, your take from these numbers?
Yeah, so Tom, we're here in Wolfsburg. We're just here behind us is where we're going to have the annual press conference. We're going to hear from all of the sort of different executive suite here at Volkswagen from the different brand heads, from the CEO, Oliver Blume, and the CFO, Arno Antlitz, who we'll be speaking to in a little bit of while. But listen, overall, what we got from the full year is basically revenue that was flat, operating result, though, that it beat estimates, as you mentioned, down 15%, and the operating margin coming in at 5.9%. We should contrast that. That's the full year for last year, what we got in 2023. So we got 5.9% last year, 2024. The year before that, it was 7%. And now we're guiding potentially lower, but, you know, a range of 5.5% to 6.5%. Again, when we look at the volumes, the number of cars that were sold last year, they were down very slightly, 9 million cars. That's down about 3.5%. But again, this is a sort of transition period for Volkswagen. This has not been a secret. Remember, last year, there was this very tough labor negotiations and all the sort of cost adjustments that had to go. And this is also a very capital-intensive period for the industry in general, but for Volkswagen in general. But I think that going into this meeting, there is a sort of strategy from the C-suite here that's saying that basically they've laid out their strategy. Now it's about execution. And many of the problems that Volkswagen is now facing are many fewer of them are Volkswagen specific. They're really industry specific, right? We're talking about U.S. tariffs. We've got an outlook here. I don't know how anybody in the car industry can give an outlook in March of 2025, just given the uncertainty we're seeing from the United States. But that's going to be one of the major issues. And just to recap what we saw in terms of volumes last year in the different regions, because this is important. Western Europe was basically flat in terms of the number of cars sold in the fourth quarter last year. North America was a bright spot, up 4%. And again, China, Tom, the recovery in China is just not happening from the high end, from the low end. Chinese volumes in the fourth quarter down 8%. And frankly, I don't know that we're going to see anything sort of in terms of meaningful recovery, and especially also in the luxury recession that we've been seeing in China. That is very much enduring for the higher end vehicles that Volkswagen sells.
Yeah, we know Porsche's been impacted by that, hasn't it? In terms of, Ollie, what are you going to be asking the CEO then? What's going to be the first question you're going to be putting to him on the back of these numbers? Is it going to be China? Is it going to be Europe, the US? Is it going to be the tariff question? What is kind of top of mind, you think, for the executive team right now?
Yeah, that's funny you should ask that, Tom. I mean, listen, I think for me, the main question is, in a time of radical uncertainty on so many fronts, whether it's sort of the growth forecast, whether it's a question of tariffs, and your job is to allocate capital and try to be competitive going into next year, but going into the next decade, they're laying out their strategy for the next decade. What is a certain bet that you can do? What are the places that you can place money that you know are going to provide structural basis for growth for this company, just given the volume of uncertainty? I mean, there's one of the things we were joking about it sort of last night. One of the decisions that they made, so they built some of their battery factories over in Canada in order to access the U.S. market for EVs, right? That is now coming into question. There is the fact that they went to go build the Golf, the famous sort of Volkswagen brand in Mexico in order to get into the United States. So we joked about it. I mean, it's now the Gulf of America, right? And this is the sort of new reality for the sort of auto industry that's trying to figure out where they're trying to build all of these cars. And the reality of the situation is no one is going to make these huge decisions in terms of where you're going to base factories, the sort of rollout of these sort of vehicles that have 7-year sort of timelines with this sort of uncertainty where day to day you're getting a different message from the Trump administration. So really here they're going to be wait and see what is going to happen with these tariffs.
OK, Bloomberg's Oliver Crook in Wolfsburg. Thank you very much indeed. We'll have that CEO interview, of course. Ollie will be speaking to the Volkswagen Group CFO, Arno Antlitz, I should say, and you will be able to catch that interview at 8:30 a.m. London time. So tune in for Ollie's interview with the CFO of Volkswagen later this morning. Let's get back to these markets right now, because we have seen a remarkable 24 hours in terms of the fading of the Trump trade. Yes, the futures picture is looking slightly more positive, but you saw a sell-off of around 1.3% on European stocks by the end of the close, but the pronounced downside coming through from the Nasdaq 100, closing almost 4% lower. The S&P almost 3% lower yesterday. Of course, the pressure on Mag 7, that grouping dropping 5%. Tesla tumbling 15%. President Trump says he's going to be buying one of the vehicles today as a sign of support for Elon Musk. European futures pointing to gains of 0.6%. FTSE 100 futures pointing up by 23 points. S&P futures looking to add 0.2%, but nowhere near making up the losses of yesterday, as Citi has said that US exceptionalism is on pause, at least for now. Nasdaq 100 futures after the rout of yesterday pointing to very modest upside of 0.1%. Let's flip the board and have a look at cross asset. The Trump put has crumbled in the face of this pressure, and so far no rhetoric from the US president to assuage some of these concerns. The US 10-year then has been bid 4.19 right now, yields down 2 basis points. Lots of money moving into treasuries as a haven bid. Euro dollar at 1.08. The single currency up 0.3%. Some of that down to what we've been hearing from Green Party leaders in Germany, suggesting that a deal could be done on defence spending possibly as soon as this week. Brent at 6-month lows, below $70 a barrel, but up 0.2% so far in the session. Crypto has also come under pressure, though Bitcoin is up in the session today. Cryptocurrencies among the much-touted Trump trades that have fallen since his return to office. That is despite his announcement of plans for digital asset reserves and pledges to make America the world's crypto capital. Let's check in then on Bitcoin and the pricing. We look at gains today, but this since, of course, January, and the downside is there. The crypto check right now, that's intraday, of course. You're seeing a little bit of money moving back into crypto, but you're looking, of course, at Bitcoin down about 25% since January. So let's talk about some of the factors at play here and bring in Deutsche Bank's research senior strategist Marion Laboure for the details and the analysis. Marion, thank you for joining us. Has the thesis that Bitcoin, that crypto could be a safe haven in a time of geopolitical angst, when did that thesis die?
Yeah, first of all, good morning. Thank you very much for having me. So at some point, indeed, we used to think that Bitcoin was a good hedge against inflation, good asset. But as you mentioned, it fell about 25% since the peak. It's now back to this November level around $80,000. I would say much of the recent Bitcoin price action was driven by speculation, wishful thinking, and not fundamentals. President Trump has been promising a lot during his campaign. We've also seen the March 2nd reserve announcement, which caused a temporary jump based again on speculation of government buying crypto and Bitcoin, and this wishful thinking didn't last, and the price retreated sharply. Having said that, because you mentioned the announcement, I would say that a Bitcoin rebound depends on regulatory clarity, institutional investment, and improved market sentiment. And what we've always seen is the fact that Bitcoin prices is also significantly impacted by macroeconomic factors. I'm thinking about Fed interest rates, economic growth, and also geopolitics factors. And usually, it's also more volatile than stock. And it's correlated to the Nasdaq and the S&P. So it's probably going to be very risky to remain highly volatile, especially given this context of uncertainty and tariffs, which are both going to persist.
OK, so we look for clarity on the regulatory front. We look maybe for some clarity on the macro front as well, and maybe the tariff story is part of that. Do you think, Marion, kind of broadly the pendulum has swung too far in the other direction right now? Has the sell-off gone too far and too fast?
If we look at the big picture, Bitcoin prices doubled last year, which was clearly a significant increase. So now it's reverting, given that this big surge was again driven by what I call the Tinkerbell effect and this wishful thinking. Now, if I look at President Trump and what he's trying to do, we had the summit last Friday. He's also trying to bring some clarity. And there was clearly a demand during the summit for a clear and straightforward regulation. So he is aiming to set a comprehensive digital asset regulatory bill, he mentioned before the August month this year. And I believe that a regulatory landscape will impact also the future of cryptocurrencies, because if we have a clearer regulatory framework, it's going to drive probably like more investment, higher liquidity, lower volatility. So overall regulation is a net positive for the industry.
Yeah, Marion, and we've seen change at the top of the SEC and maybe a more benign leadership when it comes to the Securities and Exchange Commission. What we know, the crypto industry was rankled at the former leadership under, of course, President Biden. That has changed, Marion. What specifically on the regulatory front would you be looking for in the weeks and months ahead that could be a catalyst?
Yeah, so there are a couple of regulatory issues. And again, it was mentioned during the summit last Friday, which include defining asset categories, simplifying compliance, facilitating safe integration with traditional financial institutions. So all of this has been mentioned. And also maybe one big news that we had last week, Trump issued an executive order establishing both a strategic Bitcoin reserves, which is going to hold over like 207,000 Bitcoin, which have been sized by the government, intended as a long-term store of value similar to gold. And the administration is also going to have a digital asset stockpile, which is going to consist of confiscated altcoins.
OK, really important analysis. And I like the line about the Tinkerbell moment for crypto. Deutsche Bank Research senior strategist Marion Laboure on what to watch for, particularly on the regulatory front when it comes to the crypto space, given that Bitcoin is down about 25% year to date. But, of course, after those incredible gains that we saw in 2024 more broadly. Coming up, powering the AI boom, we're going to discuss the ever-growing demand for data centres and what this means for Europe. We're going to be speaking to a leader from Schneider Electric, Europe's operations executive vice president. That exclusive interview is coming up next. This is Bloomberg. Welcome back. Bloomberg has learnt that CoreWeave has agreed a 5-year contract with OpenAI. Sources say the cloud computing company sealed a pact worth close to $2 billion to provide services to the AI pioneer. The deal also gives OpenAI a stake in CoreWeave worth about $350 million. CoreWeave's closely watched potential IPO could value the NVIDIA-backed company at more than $35 billion. Meanwhile, it's estimated hundreds of billions of dollars are needed to build out the infrastructure to power AI demand. Meta says it's planning to invest as much as $65 billion on AI projects just this year. Microsoft looking to spend $80 billion on data centers this year alone. Let's discuss then the outlook and particularly the picture in Europe with Gwenaelle Avice-Huet, Schneider Electric's Executive Vice President for Europe Operations, joining me in the studio. Gwen, thank you for joining me and for taking the time. Let's talk about the European piece of this then. There's been a lot of discussion about what the hyperscalers are doing in the US to build out data centers. Are we lagging in Europe? How many data centers are we going to be building this year? And what role are you going to be playing in that?
Yeah, thank you, Tom, for having me on this important question. So just maybe to give a sense of what's happening, we see a global demand that could reach triple by 2030 in terms of data centers. It's going very fast. It's not happening only in the US, it's also happening in Europe. And I can tell you across the board in different geographies around Europe, we see a large demand. It's coming from the big players, but also it's coming from the co-locators. And the question is how to scale it. The wave of projects that we're seeing in Europe is so massive, so that we need to think about the whole end-to-end value chain from powering these data centers. It's a lot of energy, and at the same time making sure that we collect the data the right way and the regulation is enforcing and encouraging data centers development in Europe. So yes, it's happening. It's in a very strong trajectory, and the question from us as Schneider Electric is to accompany that with the right technology, and we're talking different types of data centers, data center for cloud, but data center for AI together. So we need to bring the right technology for these data centers to take off in Europe. But second, we need also to make sure that we power these data centers with green energy, right? It's really important to continue the energy transition, and data centers have a role to play in that sense. So that's why sustainability, energy transition, and at the same time technology is core for this development.
So the build-out is happening. Just can you give us some ballpark numbers in terms of how many data centers you expect, how many shovels in the ground projects this year, and which countries are leading on that front?
Well, to give you an order of magnitude, I think that we have never seen such pipeline of projects. The question of the realization of pipeline is something that is under discussion because, of course, we don't know yet if it will be hybrid data centers from cloud or from AI, or a combination, or only AI, etc. All that is being designed in Europe. But the question is that we are seeing those developments happening in geographies that were not used to these data centers. Just to give you an order of magnitude, a lot of data centers happen historically in Ireland, for example, but also in Germany, but also in France. Now we are seeing that scaling across Europe. For example, now in Nordics, I can tell you that half of the growth is coming from data centers, renewable energy and hydrogen for our own development. So it's just showcasing that we see a lot of development in new geographies. Why? Energy is available, energy is cheap, and energy is renewable. But
that's not across the board, is it? So the Nordics benefit from that energy. France has nuclear power. Germany, though, industrial energy costs are 3 times higher than they are in the US. To what extent is the energy piece holding some of these jurisdictions, some of these countries back, and how do you solve that?
Well, we see that because at the end of the day, it's also availability of land. It's not only power, it's availability of land. It's the ability also to recover heat, because heat recovery is one aspect. It's also to recover water. So it's a lot of aspects. That's why sustainability should be the enabler of the development and scale of data centers. I'm not talking about Spain and Italy, but I can tell you these are also massive development. Maybe to give you an order of magnitude, we're working with digital reality in France and in Spain, and we are decarbonizing these data centers through PPAs, renewable energy, power purchase agreement with renewable energy. That's also a way to decarbonize.
Some will hear sustainability and they'll hear regulation. Is red tape getting in the way? What needs to be cut at this point?
Well, you're absolutely on the right spot. I think that we have to be careful. Historically, Europe has been over-regulating. And we need to make sure that regulation is the enabler and not, on the contrary, an obstacle to those developments. We want Europe to really embrace this development of data centers that is happening. Why? Because we need that for the digital transformation of Europe. To decarbonize Europe, we need more energy efficiency. To have energy efficiency, we need digital. Because we need sensors, we need to collect the data, we need to have edge, and then we need to have intelligence. So that's why digital transformation of Europe will only happen if we have data centers, if we have these developments. So that's why we cannot over-regulate. And that's something that needs to be really fine-tuned.
Have any of your customers or clients suggested that they're going to be spending less, given the developments that we've seen from DeepSeek on efficiencies?
I can tell you, DeepSeek is a good news because, on the contrary, it showcases that it will become efficient. We need more efficiency in all that. That's why optimization of the design of the data center is something that we've been working on, but optimization of the technologies inside, at the end of the day, this is positive. This is positive for the planet, and we need to consume more data. So you see all that, yes, it's going in the right direction.
OK, Gwen, thanks so much for coming into the studio to talk through what Schneider Electric is doing and the opportunities around data centres, some of the challenges as well. Gwenaelle Avice-Huet, Schneider Electric's Executive Vice President for Europe Operations, on the push around data centres in Europe, the energy piece and regulations as well. There's plenty more coming up. Stay with us. This is Bloomberg.
We have been ready to negotiate since the night of the elections. We have been surprised that there has been nobody really engaging with us seriously.
Do you think it's likely that we could get a deal by the end of this week?
No, I really hope so. I'm like, the situation is dire in Ukraine. We really need Europe to speed up its own defense.
Franziska Brantner, co-leader of the German Green Party, speaking to me earlier. Her comments about potentially reaching a deal as soon as this week on defence spending out of Germany, lifting the euro and as well putting pressure back on Bund futures after the rally that we saw yesterday, after the Greens came in and said, you know what, we're not ready to support this deal. That language seems to be moderating. They have been having those conversations. A deal could happen this week, is what we're hearing from the Green Party. European futures up 0.5% after the losses of more than 1% yesterday. The euro on the single currency gaining 0.2%, and Bund futures under pressure again. Expectations you might see another move up higher in yields on that defence spend impulse coming through. Let's flip the board and have a look at what's been happening stateside with the sell-off and the end of the Trump trade. US exceptionalism on pause is what Citi says. The S&P 500 closing into correction territory, sniffing at the heels of that level, down 8.6% from its state record high, of course, down 8.6% from that level. You are looking at the biggest drawdown since August of 2024 when it comes to the S&P 500. Let's flip the board and have a look at what's been happening in Mag 7, because that's the pain point. This has been a narrow and a narrowly defined sell-off that we've seen, and a lot of it concentrated in technology. Mag 7 down into correction territory, wiping out the gains post-election. You're seeing losses for the likes of Tesla of about 15%. That's just yesterday. And that is putting pressure on the wealth of Elon Musk and co. Let's have a look at what is happening in terms of the wealth drawdown. You've even had the President Trump coming out and suggesting he's going to buy a Tesla in support of Elon Musk today because he's so concerned about the wealth squeeze on Musk. He's lost about 185 billion. He's still fine. Don't worry. He's lost about 185 billion. So what a remarkable turnaround since the picture of all those tech CEOs lined up alongside the President, of course, at the inauguration. We continue to watch the squeeze on the tech stocks through today as well. And the opening trade will be discussing and analysing that. They've got a bunch of fantastic interviews, including the CFO of Volkswagen. Stay with us for the opening trade. This is Bloomberg.